Today, we curated, reviewed, and money-highlighted interview video that Warren Buffett. Why you should never invest in Bitcoin, unbelievable, by FREENVESTING. In these conversations, Warren Buffett and Charlie Munger candidly discuss their skepticism about cryptocurrencies, particularly Bitcoin. From dissecting the lack of intrinsic value to highlighting concerns about illegal use, the legendary investors provide insightful perspectives on the evolving landscape of digital assets.
In terms of cryptocurrencies generally, I can say almost with certainty that they will come to a bad ending. It's ingenious and blockchain is important, but Bitcoin has no unique value at all. It doesn't produce anything. You can stare at it all day and no little Bitcoins come out or anything like that. It's a delusion, basically. If I could buy long-term puts, if I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it, but I would never short it.
Warren Buffett is the greatest investor of all time. Today, we will hear his opinion on Bitcoin. This video is a must-watch all the way through, regardless of your attitude to cryptocurrencies. As Charlie Munger says, if you disagree with somebody, you want to be able to state their case better than they can. And at that point, you've earned the right to disagree with them.
While Warren Buffett's skepticism towards cryptocurrencies is understandable, there's merit in adopting a more nuanced approach. Instead of outright dismissal, strategic diversification, exploring blockchain opportunities, staying informed, fostering a long-term vision, implementing smart risk management, promoting collaboration, and embracing innovation could enhance the overall resilience of Berkshire Hathaway's portfolio. By acknowledging the potential evolution of financial landscapes and carefully navigating crypto spaces, there's room for growth and adaptation without compromising the core principles of sound investment practices.
If people think they're going to make money the next day, and worse yet, if they think somebody else that they know is going to make money and they aren't going to make money, it just draws people in.
At one point this weekend, you said that Bitcoin, and this was based, you were asked, Charlie said Bitcoin's like rat poison. You were asked about that comment, and you said, well, it's probably more like rat poison squared. Charlie went on in the meeting to then basically call Bitcoin turds.
He is an expressive sort, isn't he? Maybe when he gets a little older, he'll mature.
I just want to ask you about that because it sparked so much controversy, and particularly on Twitter and some of the places where you might expect people who are trading in cryptocurrency to be pretty loud about what they heard. What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 2/10 of 1%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. And productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year, look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business, but
Warren Buffett's skepticism towards non-productive assets like Bitcoin stems from a fundamental investment philosophy focused on assets that generate tangible value. Unlike farms or businesses that produce crops or earnings, cryptocurrencies rely on speculative demand and are not inherently productive. The concern lies in the absence of intrinsic value and reliance on finding the next buyer willing to pay more. Buffett emphasizes the importance of investing in assets with inherent utility, highlighting the historical track record of productive assets like farmland or businesses that generate consistent returns over time. The argument extends beyond Bitcoin to include other non-productive assets, emphasizing the value of investments that contribute to wealth through ongoing production or earnings.
if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else, and they come to an end. I mean, those.
So, that's a greater fool theory. That's what you're saying.
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow, and it's wonderful because it does create a rising price, does create more buyers, and people think I've got to get in on this, and it's better if they don't understand it. That's the other thing about non-productive. If you don't understand it, you get much more excited than if you understand it. I mean, if you buy a bond that says it's going to pay you 4% a year, you're not going to get any pleasant surprises. She's going to pay you 4% a year. But if you can have anything you want to imagine. If you just look at something and say that's magic, you can do it with shark's teeth or seashells or anything. And they did it with tulips in the 17th century in Amsterdam, and they'll do it again. I mean, people, they like to speculate, they like to gamble, and if you can get something, particularly if you have something half plausible going on.
Warren Buffett's cautionary stance on cryptocurrencies, such as Bitcoin, revolves around the notion of the greater fool theory. He highlights the risk of buying assets with the expectation that their value will perpetually rise, solely relying on finding someone else willing to pay more. Buffett likens this to a scenario where two people keep trading a limited supply of assets between themselves, hoping to attract the next participant who will pay an even higher price. He emphasizes the speculative nature of such investments, where excitement often outweighs understanding, creating a cycle of rising prices until it eventually comes to an end. Buffett stresses the importance of investing in assets with inherent value and utility, rather than relying on the hope of finding the next buyer in a speculative market.
If you had bought gold in 1942 and you say, we might lose the war and we might have to run off to some other country, and so let's put our assets in gold, you would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, if somebody calls that a store of value, I mean, I think they're delusionary.
Okay. Andrew has a question, too. Andrew.
Hey, Warren, related to this issue of Bitcoin, you saw that Goldman Sachs just last week announced they were going to create effectively a trading operation around cryptocurrencies and Bitcoin in particular. You've been an investor in Goldman. What do you think of their decision to do that?
Well, they probably think that lots of people are going to get very excited about it. Well, and maybe already are, but they think there's money to be made trading them. I don't think they're expressing an opinion on the ultimate value. I would be very surprised if the top partners of Goldman are selling their Goldman stock and putting it into Bitcoin. But I want to cover this subject now because my friend Charlie will come on at 8 o'clock. There's no telling what he will say.
Well, that's my whole entire point. I do want to ask Charlie about it because I think when he talked about the turds, he was referring to this. He said, if you're trading this, it's like watching other people trading turds and deciding you want to get a piece of that.
Well, you're not going to get me to comment on that.
Hopefully Charlie's not awake and not watching.
Well, the truth is
right
people
now.
do trade on very crazy things over time. Imagine people selling their homes to buy a tulip in Amsterdam. I could whisper something on this program, and kind of the more sillier it was, the more it might react, because there's no quantitative limits. If you buy a stock, you say, well, I'll buy it at 15 times earnings, but I won't buy it at 20 times earnings. But when you get into something that doesn't produce anything, there's no checkpoints. There's nothing to reference it to. It's gone up, so it'll keep going.
Warren Buffett critiques the idea of Bitcoin and similar cryptocurrencies as a store of value by drawing a historical parallel with gold. He highlights the folly of considering gold as a safe haven during uncertain times, citing the example of buying gold in 1942 with the fear of losing the war. Buffett notes that if you had chosen gold over stocks, your investment would now be worth less than a penny for every dollar invested. He dismisses the notion of gold as a reliable store of value and applies this skepticism to Bitcoin. When asked about Goldman Sachs entering the cryptocurrency market, Buffett speculates that the move is driven by the potential for profit rather than an endorsement of the ultimate value of cryptocurrencies. He doubts that top executives at Goldman Sachs are abandoning their stock for Bitcoin. Buffett refrains from commenting further on Charlie Munger's metaphorical reference to Bitcoin as his turds, but acknowledges the speculative nature of trading in assets that lack intrinsic value. He underscores the absence of fundamental benchmarks for non-productive assets like cryptocurrencies, emphasizing the speculative and unpredictable nature of their prices.
Well, those who know me well are just waving the red flag of the bull. Of course, I hate the Bitcoin success. And I don't welcome a currency that's so useful and to kidnappers and extortionists and so forth, nor do I like just shuffling out a few extra billions and billions and billions of dollars to somebody who just invented a new financial product out of thin air. I think I should say modestly that I think the whole damn development is disgusting and contrary to the interests of civilization. And I'll leave the criticism to others.
I'm all right on that one.
So what factors caused you to say that it's a bubble?
Well, generally non-productive assets remain, if you had bought gold at the time of Christ and you figure the compound rate on it, it may be a couple tenths of 1%. It essentially is not going to deliver anything other than supposed scarcity, because you can only mine so many. But so what? I mean, what does it produce itself? The check is a wonderful idea. Just imagine how the world would be without being able to write checks or have wire transfer of funds. But it doesn't make the check intrinsically itself worth a lot of money. And if you said you can't use something called check with a little piece of paper, you'd do something else to transfer money. I think that anytime you buy a non-productive asset, you are counting on somebody else later on to buy a non-productive asset because they think they can sell it to somebody for more money. And it's been tried with tulips, and it's been tried with various things over time, and it does come to a bad ending.
Warren Buffett and Charlie Munger strongly criticize Bitcoin and similar cryptocurrencies, expressing concerns about their speculative nature and potential negative societal impacts. Munger finds Bitcoin's success repulsive and dislikes its potential use by criminals. He disapproves of the massive financial attention directed towards a product created out of thin air. Buffett likens non-productive assets like Bitcoin to historical speculative bubbles, emphasizing their lack of inherent value and reliance on future buyers for profitability, a pattern that has often led to bad endings in financial history.
You have a hard time. You can think of raw land. I mean, the Louisiana Purchase was, say, $15 million for 800,000 or so square miles of land. In fact, you're sitting on land that came with the Louisiana Purchase. And so what we paid $20 a square mile, and 640 acres in a square mile, and you're down to 3 cents or something. So that was a pretty good purchase of what was then a non-productive property. But it depends. It's very hard. You can buy stamps. Bill Gross got collected a wonderful stamp collection, and it sold for more money in the end. But it's dependent on somebody else wanting to buy, hoping they will sell it for more money, and so on. And in the end, you make your money out of productive assets. If you buy a farm, you try to estimate what the crops, what amount per acre of soybeans or corn or whatever may be raised, and how much you have to pay the farmer that farms it for you, and what your taxes will be, and various things. And you make a conclusion based on what the asset itself will produce over time. And that's an investment. When you buy something because you're hoping tomorrow morning you're going to wake up, and the price will be higher, you need more people coming into it than are leaving. And you can get that, and it will feed on itself for a while, and sometimes for a long while, and sometimes to extraordinary numbers. But in the end, they come to bad endings, and cryptocurrencies will come to bad endings. And along with the fact that there's nothing being produced in the way of value from the asset, that you also have the problem that it draws in a lot of charlatans and that sort of thing who are trying to create various sorts of exchanges or whatever it may be. It's something where people who are of less than stellar character see an opportunity to clip people who were trying to get rich because their neighbor's getting rich buying this stuff that neither one of them understands. It will come to a bad ending.
Buffett emphasizes the importance of productive assets that generate income, contrasting them with assets that rely on others buying at higher prices. They highlight the speculative nature of cryptocurrencies, warning of bad endings and the potential for fraud and charlatans in the space. Overall, their advice is to focus on investments with tangible value and avoid speculative assets.
Charlie?
Well, I like cryptocurrencies a lot less than you do. And so, to me, it's just dementia. And I think the people who are professional traders that go into trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out.
To the extent that we're being webcast around the world, I hope some of our stuff doesn't translate very well, actually. In terms of cryptocurrencies, generally, I can say almost with certainty that they will come to a bad ending. Now, when it happens or how or anything else, I don't know. But I know this, if I could buy long-term puts, if I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it, but I would never short a dime's worth.
Have you thought about trading the futures to take a negative position on Bitcoin?
No.
You would not do that?
No. There's no reason. I get into enough trouble with things I think I know something about. Why in the world should I take a long or short position in something I don't know anything about? So, we don't have to know what cocoa beans are going to do or cryptocurrencies. We just have to focus on 8 or 10 stocks businesses, basically, that we think are decent businesses. But I do think that I think what's going on definitely will come to a bad ending. I mean, you've got virtually everybody. I have a class, I have 11 schools coming on Friday. The questions will be on Bitcoin, and I won't know the answers.
Although when we sat down, Warren, you did say, I should have announced that we were getting involved in Bitcoin this morning.
Well, that is true. I mean, if that would be much more interesting to the audience that we were going to issue a whole series of cryptocurrencies tomorrow. But we aren't, believe me. And we don't own any. We're not short any.
Charlie
we'll never have a
Munger
position.
strongly dislikes cryptocurrencies, likening them to a dementia and criticizing traders involved in them. Warren predicts a bad ending for cryptocurrencies, expressing no interest in shorting them. Warren Buffett adds humor, noting Munger's suggestion to announce involvement in Bitcoin, but clarifies they don't own or plan to have any cryptocurrency positions. The overall sentiment is skepticism and caution toward cryptocurrencies.
Lucas writes in, he said, did Justin Sun change your mind on cryptocurrencies? For anybody who doesn't know, Justin Sun bought the dinner or the lunch that you just had from the last Glide Foundation fundraiser. He is actively involved in Bitcoin. After that meeting, his PR people put out some notes saying that, you kind of listened to cryptocurrency and maybe you're a little more in tune with the idea of Bitcoin now.
Well, I would say this. When Justin and 4 friends came, they behaved perfectly, and we had a good 3.5-hour dinner, and the whole thing was a very friendly exchange of ideas. But cryptocurrencies basically have no value, and they don't produce anything. So you can look at your little ledger item for the next 20 years, and it says you've got X of this cryptocurrency or that. It doesn't reproduce. It doesn't deliver. It can't mail you a check. It can't do anything. And what you hope is that somebody else comes along and pays you more money for it later on. But then that person's got the problem. But in terms of value, zero.
So it sounds like he did not change your position.
No, but I didn't change his either. And I had a very pleasant dinner, and those people they behaved more than well. And they gave Justin gave $4.6 million to Glide, and that will buy a lot of meals and provide a lot of beds for people in San Francisco. So I thank him.
He gave you some Bitcoin. What's it feel like to be a Bitcoiner?
I don't have any Bitcoin.
You don't?
No.
Okay. You don't own Bitcoin?
No, I do not own one. I don't own any cryptocurrency. I never will. And, in the end, I may start a Warren currency. Maybe I can create one, and I'll say there's only going to be 21 million of them, and you can have a little ledger sheet from me and everything that says you have it, and you can have it after I die, but you can't do anything with it except sell it to somebody else. And
Warren Buffett remains skeptical about cryptocurrencies, emphasizing their lack of intrinsic value and productive capability. He acknowledges a friendly dinner with Justin's son, who's involved in Bitcoin, but emphasizes that cryptocurrencies essentially produce nothing. Buffett appreciates Justin's generous donation but firmly states he doesn't own any cryptocurrency, won't, and likens the idea to potentially starting his own war in currency. The overall tone is one of unwavering skepticism towards the value of cryptocurrencies.
The interesting thing, of course, is that Bitcoin's been out there a long time, and people talked about how it would be used in various kinds of exchange, but none of our companies are doing business in Bitcoin or anything. Bitcoin has been used, I think, to move around a fair amount of money illegally. So the people,
or maybe in countries where you have a hard
so
time
the logical move from the introduction of Bitcoin is to go short suitcases, because the money that was taken in suitcases from one country to another, suitcases will probably fall off in demand. I mean, so you can look at that as the economic contribution of Bitcoin to the society as a.
Warren Buffett points out the irony that despite Bitcoin being around for a long time, none of Berkshire Hathaway's companies are conducting business in Bitcoin. He raises concerns about Bitcoin's potential involvement in illegal money movement and humorously suggests that the logical move, given Bitcoin's rise, would be to short suitcases since the demand for physically transporting money might decrease. Buffett adds a touch of humor while underscoring the lack of practical economic contribution from Bitcoin.
I'll ask this very fleetingly. Has your position changed on Bitcoin?
No, I mean, it's too bad, but Bitcoin, it's ingenious, and blockchain is important, but Bitcoin has no unique value at all. It doesn't produce anything. You can stare at it all day and no little Bitcoins come out or anything like that. It's a delusion, basically.
So we've gone from rat poison squared to a delusion. Well, that's kind of an upgrade.
Yeah, I don't. Who knows where we'll be next year? But I'm really sorry it happens, because people get their hopes up that something like that is going to change their lives, and it was a very ingenious thing to figure out how to have a limited supply and make it harder more expensive to create them as you go along, and all that sort of thing. But it doesn't. The function. And this is explained to me by people a lot smarter than I am, but they say blockchain does not depend on Bitcoin. And J.P. Morgan is talking about creating their own, JPM, and it'll be worth $1. I mean, it's matched to the dollar to dollar, and I'm sympathetic to people that
Warren Buffett maintains his critical stance on Bitcoin, emphasizing that while blockchain is important, Bitcoin itself has no unique value. He describes it as a delusion, highlighting that it doesn't produce anything and doesn't function as a reliable currency. Buffett acknowledges the ingenuity behind Bitcoin's limited supply mechanism but remains skeptical about its practical utility. He expresses sympathy for those who own Bitcoin but reiterates his belief that it won't change lives as people might hope. In conclusion, Warren Buffett and Charlie Munger, two stalwarts of the investment world, maintain their skeptical stance on cryptocurrencies, particularly Bitcoin. Despite engaging in discussions and dinners with crypto enthusiasts like Justin's son, their views remain unchanged. Both Buffett and Munger emphasize the lack of inherent value in cryptocurrencies and express concerns about their long-term viability. As they navigate the evolving financial landscape, their unwavering commitment to traditional investment principles stands firm. If you were inspired and gained insightful knowledge from our informative review, please give us a like and consider subscribe to our channel Money Highlighted for more. Thanks.